say the market's changed over the last couple of weeks just because each time volatility's picked up since beginning of 2012, it's died down after a few days. But this is definitely different. And the last time we saw something like this where the market came off like this, rallied back, came off, rallied back, came off, was probably January 2010. So that preceded a pretty nice downsized move in the market. It's indicative of topping process, some people call it. I don't know. I've just found that it leads to downside moves generally when you see this sort of whippiness, lack of stability, more fear picking up. So let me see if I can actually get the signal to work for once. There we go. So I was just going to see if I could grab that for you. I guess it was this period right here probably. So there was a lot of whippiness up and down, up and down, up and down, and it was like boom and boom. So obviously we're a lot higher now. And so what I was thinking was maybe we would come in and test this low from August on the open today. Now, so far the first move was up. I did short into 193, shorted a little bit right below it, a little bit above it. I was short from the close 193.6 yesterday, but I covered most of that into 192.30 in the after hours. So just trying to position myself so my risk is not that great for and capture this move down to here. That's kind of how it plays out. Now, as volatility picks up, we want to focus more of our energy and actually trading the market itself because the market is in play. We always want to be what is in play, and that's why I put some of those ETFs on the morning game plan for you to start taking a look at. Understand that with this whippiness, maybe use smaller position sizes. You take profits very quickly, at least on half your position, and these things are just going to bounce back and forth a lot, as we saw yesterday very clearly. Okay, so how does this right? So anyway, in the after hours yesterday, right, that's better. So in the after hours yesterday, we popped up to 193.30, came off about a point. This morning, you can see we were a little bit lower, down to 191.70. So we popped up here to about 193.15 so far. That's been the high in the pre-market. I'm watching this area right here where the last top out before we came off into the close was about 193.60. So I'd like to see us kind of stay below there. But that's still 2.5 points from my downside target for today. So it is a pretty good risk reward there. Let's take a look at a couple of the other ones quickly. TNA. So just remember with these triple leveraged ETFs that the levels change every day because of time to day with the underlying instruments. It's not really important for you to understand that other than the levels develop intraday usually in this. Sometimes you'll have levels, or I haven't traded them a while, but sometimes you would have levels people would remember from the prior day. But generally, you're looking at levels from day to day. So you kind of see. In this case, it had the down move, had the retracement, but when it took out that intraday low here at $60, it came off another $2 or so. So TNA, very liquid, trades 9 million shares a day. It's the IWM triple levered, so it's been one of my favorites when things start to get a little crazy. And FAS, which I think is probably harder to trade than TNA in a wider spread. Only does 2 million shares. This volume will pick up. Now, yesterday it did 4 million shares, so I would expect 3 to 5 million shares maybe will be the new volume levels on this one. And so, in terms of price movements, it moved $4 or $5 yesterday, and it was pretty clean, especially after it got below 102. It came back up to that 102, held lower, and then held below 100. right here. So these are the ones I would be looking at.